Now this is my Euro USD chart, and judging from last week, you can see we're downtrend. Okay, from the 15-minute time frame. In my higher time frame is 15 minutes. I take my entries on 1 minute. From the 15-minute time frame, you can see we're breaking structures to the downside. Okay, you can see we have something like this break of structure, another break of structure to the downside. Now there was a change of character on Thursday. This high was taken out. Okay, that high was taken out. Okay, that high was taken out, and which means we are no longer in the downtrend. And when you look at this very well, the other block that led to this change of character is this guy. This is the other block that led to it. This is the other block, the valid order block, or the demand. Okay, you can call it demand. This is the demand that led to this change of character. So this was on Thursday. Fast forward on Friday. Once there's a change of character, I wait for the market to come back into my demand or my supply zone. Then I take an entry. I look for confirmation entry and I take it. Now on Friday, fast forward on Friday. Okay, let's go to Friday. Let's go to Friday. Okay, this is Friday. Fast forward on Friday. Even prior to Friday, there was another break of structure here. Okay, there was another BOS break of structure on the 15 minutes. Like I always mark my structure, but this break of structure, I don't consider it as a valid break of structure, is because it is not from a discount area. Okay, it is not from a discount area. When I look at it very well, price reversed less than the 50%. At least it should tap into the 50% Fibonacci retracement and then reverses. But in this case, the market didn't get to that, which means I don't consider it as a valid BOS. I don't consider it as a valid break of structure. So I rather consider it as an inducement, okay, which is going to trap traders to rather see it as a break of structure, and it will come back and take them out. So I saw it as an inducement, not a break of structure rather. So on Friday when I woke up, I was expecting market, because once there's another break of structure here, there's an order block that led to that break of structure. So I know that the market will come, react from this order block, lure traders to come in, and later on stop them out and react to the original order block here. So I saw this as a liquidity trap. So I was expecting market to do something like this, to come back, react, and then, so this is where I would have taken my entry on Friday. This is where I wanted to take my entry on Friday, but this is where I wanted to do. I wanted to take my entry on Friday, but market didn't come there on Friday. So I waited. Fast forward on Monday. Okay, this is Monday. So you know they are still valid because they are not being mitigated yet. Fast forward on Monday, market was still doing its own thing. And as you know, as a trader, you need to always be patient. Patience pays very well in this our industry. Still, all these two other blocks have not been mitigated, and the plan still stays the same. Market should come in, lure traders here, and stop them out and come back into this is my original order block or my original demand. So this is what I wanted. Come in, lure them, then come back into this, then we take an entry from there. And as you see, market did exactly that. So as you can see, so when market got here, a lot of traders took their entries, and I know they will definitely get stopped out. So when market tapped into my order block, my valid order block, I quickly look for a change of character. You know, from break of structures okay, to change of character. That's what I look for. I just look for 1 minute change of character and I enter. So you can see this is the last break of structure to the downside, and this was the change of character to the upside. So I just needed to find a point in between this 1 minute swing and then get an entry. So from this FVG or imbalance, I took an entry from there, and my stop loss was my stop loss was around 10 pips, yeah, something like this. This was where my stop loss was, and I targeted the swing high, the 15-minute swing high, which was this guy over here, this guy. This was this. It was around 12.5 thereabout, and within 30 minutes I was at TP. I didn't even take much time. I didn't take more than 30 minutes to hit take profit on this trade. This was on my inducement, and that was pretty much about it. So it's very simple. Look for a valid order block. Identify a liquidity trap. It can either be inducement or equal lows or equal highs liquidity, and you wait for a market to come into your demand or your supply zone, and you look for a change of character, and then you take an entry. That's simple and easy. That's how I trade. That's just simple about my strategy. 15-minute market structure, 1 minute entry, simple as that. And I was able to make 1:12 risk reward trade on this Euro USD trade. Thank you for watching, and don't always hesitate to come back to this channel for more valuable information.